Hello, friends. Wish all of you a very, very happy new year on behalf of me and the Institute of Chartered Accountants of India and Women Members Empowerment Committee. And this year, with this, our Sky High Symposium, I am happy to share with all of you that we are on this 35th session, 35th episode of Sky High Symposium. It is our endeavor to serve the best to all the members of our institute, and which it is our untiring efforts towards this. And this is the platform for all our women chartered accountants as a speaker, as a moderator. And friends, we look forward to see you on your highest professional career. And then you reach the new heights. I wish all of you a very, very healthy, wealthy, prosperous new year 2023. And friends, we started this with our this year. It is 2022, the first year of mine in the council, as from the Women's Day, the Sky High Symposium. And till then, it is continuing every Wednesday. Block your time 5 to 7 every Wednesday evening, 5 to 7 with WMEC of ICAI. Today's topic, coming to today's 35th episode, and today's topic and our speakers to audit on specifically the real estate entities. Meenakshi Gupta will be going us through the entire thing on relation to the audit of real estate entities, because we have the accounting standards, the contract, how the contracts have been given and what are the values and what standard says about it and how to audit all those things. We have a specific session on intelligence automation, which will be dealt by Priyanka Tibrewal, a very, very new and unique topic. One must attend this kind of novel topics. And I really appreciate the efforts of all our moderators, Sheetal Thadeshwar, the Mansi Mishra, and Chetna Sabu, as well as Vardhini, for putting all the efforts, time, and energy for coordinating this session and bringing out to all of you. And of course, our team of the Secretariat of WMEC, Shanu, Ruchi, and everyone. Friends, a lot of things are going in the council, and we have now coming to the end of the first year of the council. And friends, I'm happy to share with all of you that we have also initiated our ICAI call Sahayata. Lot of times the calls used to come from various members and students. Sometimes their queries are not getting solved at ICAI level, and they used to call us. Now, with this, we have compiled 1,100 small and big FAQs, which are the general queries of our members and the students. And please note down the number of this call Sahayata. That is 99975 99975. In last 7 to 8 months, we have done more than 100 meetings and brought out this call Sahayata. And friends, I'm happy that this call center is working very good. I'm the joint convener of this call Sahayata group. So all your general queries will be sorted out with this call center, and more than 1,100 this FAQs are there. Friends, other than this and sustainability, we have already formed Institute of Social Auditors of India. Social Stock Exchanges also has been formed by the notification of SEBI on 27th December 2022. I am also the part of the Governing Council of Social Stock Exchange of Bombay Stock Exchange, and also the part of Institute of Social Auditors of India. We will also take one session on this opportunities on ESG and sustainability very soon in our Sky High Symposium also. So a lot of opportunities in sustainability, ESG, next 5 years. Just look into it. We are also running the certificate course on BRSR, that is business responsibility and sustainability reporting, which is mandatory for top 1,000 listed companies. I'm not taking much of your time, but the next certificate course is starting on 7th of this month. So if you are interested, please go through the details on the website and register for the same. We are also starting and conducting the peer review if you want to be the peer reviewer. So this initiative has been started, and the training session is there on 13th of January in Mumbai. So if you want to participate, please register it. The details are available on the website also. These are the certain details. There are a lot of other things going in the council and the institute, but this is the time to hear about our own very dear speakers, starting with Meenakshi Gupta on the audit of real estate entities. So, with these words, once again, I wish you a very, very happy new year. And it's all of you are so dear and near to me, so that I always try and see that I interact with all of you on this Wednesday, 5 o'clock, between 5 to 7. With these words, I give the charge of this session to the moderator and wish you a very, very happy new
year. Good evening, everyone. I have a pleasure to introduce our speaker of the day, CA Meenakshi Gupta. Madam possesses 21 years of strong cross-functional knowledge, people management, and interpersonal skill for operation excellence and business development. Madam has worked for 5 years in audit and assurance function with one of the big 4 firms in the world and handled listed corporate clients independently. Currently, Madam is practicing as a partner in own firm under the name of Gupta Rastogi and Company since January 2008. Achievement of the Madam Meenakshi Gupta is Madam is a core member of WELL, that is Women Entrepreneur Learn to Lead. Madam has served as a speaker in seminar conducted at various forums, that is study circle, on wide-ranging topics such as ICDS, demonetization, GST implementation, auditing standard, and Indian accounting standards. Being a member of Corporate and Allied Law Committee of WIRC in 2019-20, Madam has contributed in few publications of the committee. In the year 2020-21, Madam has been nominated member of Women and Empowerment Members Committee of WIRC. Madam has been a reviewer of publication of WMEC Committee of ICAI, Contemporary Professional Opportunity for New Age Members. Ma'am has been associated with the training academy, namely Gyanation Academy LLP, with the objective to conduct seminars, training sessions on various technical matters concerning our profession. With this word of introduction, I request CM Meenakshi Madam to take the charge of session and enlighten on this topic. Thank you.
Thank you so much, CA Sheetal Thadishwar, for a warm welcome and introductory remarks. First of all, wish you very, very happy New Year 2023 to all the WMEC members as well as participants of this particular webinar. I thank WMEC committee to consider me for this opening session of this year 2023 for deliberation on my favorite topic, audit of real estates, because I happen to be auditor of few real estate companies. So probably I can share my experience with you all in the aspects of audit aspects and various regulations, guidance notes issued by the institute. And I'll share, please bear with me because I have a slightly bad throat. So there might be some few interruptions which will disturb everybody. I will now share my screen so that I can show you my presentation. I hope it is visible.
Yes, ma'am.
Okay. So to start with, audit of real estate entities. What is the background of, why we need to specifically discuss audit of real estates. Auditing is auditing, be it whichever company, wherever, in whichever field we are auditing, the basic nitty-gritties are the same only. But there are certain unique features of real estate entities where, we need to deliberate upon, we need to put emphasis, we need to, have special references to various guidances given by the institute. Now, as we are all aware, in the past, there have been many companies which are real estate entities which went into IBC, insolvency, and the cases are before the NCLT, like Supertech, JP Infratech, to name a few of them. There might be more also. So then further, there were many scams also in the real estate sector, which, as we all know, real estate sector is one of the very core sectors in the industry, and it gives livelihood to many people, like architects, laborers at large. Many people are, depend upon this particular industry for their livelihood. So if any issue comes in the real estate sector, it affects so many people. In this connection, institute has issued certain standards of auditing, where consideration of laws and regulations in audit of financial statements, and identifying and assessing the risks of material statement through understanding the entity and its environment. These have been prescribed by the ICAI. So there are certain matters which are of very significance for this particular audit. So I would like to tell that anybody who starts the audit of real estate entities should go through these essays, which will help them a lot in identifying various risks associated with the audit of these type of entities. So these are very important. Now, in the recent developments, as we all know, RERA became mandatory for real estate entities. So one should, the auditors who are auditing real estate entities should also have some basic rather in-depth knowledge of RERA Act, because it has been mandated by ICAI also under Section 143(10) of Companies Act that there should be there should be references that mandatory provisions of RERA Act have been complied with by the companies, though there are no reference in auditor's report in the notes to the accounts that whether the companies have confirmed to the mandatory provisions of RERA Act or not, which is actually a requirement of SA 250 and 315. So I would like to tell that this particular matter should be taken care of by the auditors. Then there was an urgent need to issue a direction. Is by mistake. It's actually there is an urgent need to issue a direction to the statutory auditors who are conducting the audit of real estate companies for submission of a detailed RERA Act compliance certificate to the RERA, who are conducting the annual audit of such companies, because people who are auditing the company, statutory auditors of the company, would know more about the RERA non-compliances and stuff like that. So if that is brought into light by way of their own report, it will be a lot of help to the stakeholders. Then various guidances are also available by the institute. Why this guidance was necessary? Because these have unique features of revenue recognition and cost allocation. So these guidance notes gave a big help to the auditors as well as to the companies or the entities who has undertaken real estate business. So first of all, in 2012, a guidance note was brought out by the institute, namely Guidance Note on Auditing for Real Estate Transactions. So this guidance note is still applicable to non-Ind AS companies, because for Ind AS companies, there are further in future, another guidance note was also issued, and subsequently Ind AS 115 became applicable. So this is not so relevant for companies who are following Ind AS, but it is still very relevant for entities who are not in mandate of Ind AS. So there are still many large entities who are still many small and medium-sized enterprises which still do not have to comply with Ind AS. So still this 2012 guidance note is relevant for them. So I would like to guide that this particular guidance note should be very well read while auditing real estate entities. In 2016, entities who follow Ind AS, a guidance note on accounting for real estate transactions was taken out by the institute. So this was relevant for 2 years, 2 or maybe a little more years, till India's 115 became mandatory. So India's 115 became mandatory from, I think, 2018, and the date is not so clear in my mind right now. So which is revenue from contract with customers. So that became mandatory. But India's many entities do not follow, because they either do not fall under the mandate of the basic applicability of India's. So then in that case, still 2012 guidance note is applicable. Now, I would go a little bit into the contents of the guidance note, because that will give a good picture on what are the basic features of the real estate industry. So the various types of real estates are, as we all know, it's very obvious that residential, commercial, industrial, then there are only vacant lands. Now, residential also has a lot of different types, like single family homes, condominiums, cooperatives, townhouses, triple deckers, duplexes, and various other formats. Commercial, we all know there are malls, shopping centers, educational buildings, then hotels, offices. Industrial, also there are various industries like used for research, production, distribution, storage of goods, and various other. And land are vacant lands or working farms. They can be either underdeveloped, undeveloped, or they can be under development. They can be subdivisions of land, or there can be site assembly. So these are various types of real estate which has their own uniqueness in terms of revenue recognition as well as cost allocation. So now, what are the transactions which are covered by the guidance note? I'm throwing more light on guidance note rather than Ind AS, because Ind AS in itself is very complicated, and it is more for very specific entities where Ind AS is applicable. So I will lay more emphasis on guidance note. We will cover in the later stage for Ind AS 115 also in short. So now, what are the transactions which are covered under guidance note? As you can see on your screen, the sale of plots of land without any development. Then there can be sale of plots of land which with development, where common facilities like laying of roads, drainage, as we see, there are many townships which are being developed. So in that case, nowadays even people subdivide the plot of land into small pieces of lands and provide some common facilities, like internal roads are there, drainage lines, water pipelines, sewage tanks, electrical lines. Basic facilities are provided. Then various, modern facilities like sports facilities, gymnasiums, clubhouse, landscaping, etc., are also provided. Basically, for the villas and all those are being made nowadays so that is relevant here. Now, development and sale of residential and commercial units, row houses, independent houses with or without an undivided share in land. Then acquisition, utilization, and transfer of development rights. Now, there are certain, we all know that in building industry, there are development rights. Like, for example, a person may not own the land, but they may own the rights to develop that particular land. So that kind of, it's possible that the owner is one and the development rights are given to another entity. So in that case, the two entities are different, where the land is owned by one and the development rights are given to another entity. So in that case, it becomes a separate feature. Then redevelopment of existing buildings and structures. We know there are SRA schemes which are there, where or maybe the old structures which are now redundant or under in a dilapidated condition. So then in those buildings are raised, or slums are raised, and new buildings are built. Then there are joint development agreements for any of the above activities. Basically, for all the above activities, there can be joint development agreements, because it requires, this kind of projects require a lot of capital investment. So it is possible that many hands come together and they develop together a particular project. So for those cases, joint development agreements are entered into. So that is also very important to know. Now, there are certain important definitions and terms given in the guidance note, which we need to know. Basically, these are very common things, but still I will just touch upon, in short. Project. Now, project is a small group of units or plots or saleable spaces which are linked with common set of amenities in a manner that unless the common amenities are made available and functional, these units or plots or saleable spaces cannot be put to their intended effective use. Like, for example, when a project is being built, where you can see like a particular township is being developed or a particular four or five buildings are being developed together with common amenities. So if suppose the water system is not in place, then all those entities cannot function independently unless those common amenities are put in place. So that is called a project. It can be a single building also, but it can contain multiple units also. Then project costs. What are the feature? What are the parts of project costs? Like there can be cost of land and cost of development rights, because it is possible that the land itself is not owned by the person who is developing, as I already discussed. So both the things will be there. The cost of land will also be there. Then the cost of development rights will also get added to the project cost. Then borrowing costs, in case suppose the borrowing has been made to construct a particular project, in that case, it becomes part of the borrowing cost. For that, AS 16 can be referred to, that what all constitutes the borrowing costs. Then construction and development costs. Of course, the whatever the cost goes into construction of the project or development of land or whatever other costs are incurred for the project, all those form part of project costs. Now, what all includes construction costs? What are included in the construction? It is not an exclusive list. It is just inclusive list. It can be something more than whatever is listed out here. So it includes, excuse me, land conversion costs, betterment charges, municipal sanction fees, building permission costs. Basically, whatever the permissions are being taken, various clearances are taken, like environmental clearance, plan passing expenses, and then various mandatory fees are required to be paid to the municipality or the environment authorities. All those costs will become part of the project. It's very much natural. Then there are site labor costs, cost of materials used in construction, then depreciation of plant and equipments which are used for the project. So basically the equipments which are put to use for the project, not the, anyways, we will cover what is not included there, it will come. Then cost of moving plant, equipment and materials to and from the project site. Cost of hiring plant and equipment, costs of design and technical assistance that is directly related to the project. Then estimated costs of rectification and guarantee work, including expected warranty costs and claims from third parties. Now, claims from third parties also become significant in cases where, like suppose a cluster of lands have been there. So some parties might, stake their claim, no, this is our land or whatever, and there might be some claims by the third parties that, this cost is, the rights are being owned by others. So then those costs have to be settled. So that all becomes part of the construction costs, even though they might not be estimated in advance. Then what all does not include part of construction costs or not included in construction costs are general administration costs, because there are many builders where, they undertake several projects in various places. Suppose in Ghatkopar one project is there, or in Thane there is another project. So there will, but the office is common. So there are a lot of general administration costs. Then selling costs. Advertisement is one of the most important feature of building industry, we all know, because unless the projects are being advertised, selling becomes very difficult. So that becomes a very substantial part. So we should very much take care while auditing that those selling costs are not included in the project cost, because that will inflate the cost, and then the picture, the bottom line will get affected due to it. So this is very important, that selling cost should not form part of construction costs. Then there is a research and development costs. Research and development means the research and development which is outside the particular project, which is not related to a specific project. Then depreciation of idle plant and equipment. There might be some plant and equipment which are not actually put to use in those projects which you are auditing. Or then in that case, those depreciation should not form part of the construction cost. It will form part of the P&L, but not part of the construction cost. Then cost of unconsumed or uninstalled material delivered at site and payments made to subcontractors in advance of work performed. This is an important aspect, because in this particular industry, there is a very common thing that the contractors are paid a lot of money in advance. because the progressive payments are being done to the contractors, but the bills are not being received by the contractors because the work is ongoing and they cannot estimate, how much they have already delivered uh, their part of contract. So they give ad hoc amounts as advances. So some, entities you will see that they will subgroup their advance payments also in the work in progress. So we should very much be careful that though these advance payments should not form part of the construction cost actually. It should form part of construction cost only when it is materialized by way of receipt of proper bills with stages of completion. So this is important aspect which we should look into while auditing. Then costs that may be attributable to project activity in general and can be allocated to specific projects. For example, there are certain common costs which are incurred in one place at the HO level or head office level, and those are allocated to all the projects because those are relevant for the, for example, insurance. If insurance is taken for the projects, then at a single place the cost will be incurred. So based on certain, the standards, for example, the maybe the cost incurred till date on various projects can be taken as a basis on which these are allocated, all these costs: insurance, cost of design and technical assistance, construction or development overheads. For example, if a construction supervisor is there who is supervising 5 sites, so his salary will form part of the all the 5 projects. So it will be allocated based on a suitable basis. For example, the number of hours given, if that is not suitable, the number of hours given by the supervisor, then maybe the project cost itself will become the basis for allocation. And borrowing cost is also similar because it can be substantial in few cases where builders take a lot of working capital loans for various projects. Then it becomes a very substantial part of the project. So this allocation has to be proper, and the suitable basis should be determined, where we should identify whether how much borrowing has gone into the construction part, because there can be other activities which are taken by the entities. So it should not be that those costs are also coming to the projects. So that becomes little important to see into in the auditing part. Now we come to the most important part, is revenue from construction projects. This has become a very, very important part because various things are prevalent in the industry as of now. There are certain entities who take different basis for recognition of revenue. So we will just discuss that in brief. How what are the various options available for them to take recourse to, whether they should, what particular aspect is suitable for all the entity. For different entities, different things will be suitable. So what are project revenues? Project revenues can include revenue on sale of plots, undivided share in land, sale of finished and semi-finished structures. So basically the builders have various types of inventories. They can have undeveloped plots, they can have some divided plots, they can have some semi-finished structures, because sometimes what happens that the builders take the projects in hand, but they are unable to complete due to certain reasons, for maybe lack of capital infusion or different various reasons. So even they sell in the semi-finished structures also are being sold. Then consideration for construction, consideration for amenities. We all know when the projects are being sold, various considerations are being charged by the builders to the end users, like amenities, interiors, there are different consideration for parking spaces are separate. Nowadays, it is included in the agreement to sell. Then sale of development rights can be project revenue, because it might so happen that you have the development rights, but you don't want to develop a particular property, so you can sell that right also to another interested party. So project, now how are they measured? That is also important. Project revenues are measured as the consideration received or receivable. Measurement of project revenues is affected by a variety of uncertainties that depend on the outcome of future events. Now, what do we mean over here? That it might so happen that there are certain hurdles which come into the measurement. The consideration which forms part of the project revenue. So uncertainties can be like, for example, in last 2-3 years, we saw that COVID came into existence. Now, what happened that due to COVID, the construction was stopped. So the collections were affected because the end users were not paying their due amounts, because the project was stalled due to COVID. And this kind of uncertainties can also come in future also. So this becomes very important. Estimates often need a revision as events occur and uncertainties are resolved. Or suppose a stop work kind of thing has happened. The labor goes against the management, and some stop work is put on the site. So that gives undue the costs, because then the compensation will be demanded by the end users, but the builder will not be able to recover that from any person. So that becomes a uncertain cost. So this becomes very part of that. Now, therefore, the amount of project revenue may increase or decrease from one reporting period to the next, because it may so happen that in one reporting period you receive the due revenue in time, and another period you do not receive proper revenue in time. So then it will vary a lot. Now, there are various revenue recognition stages. What do I mean by stages? Is that for recognition of revenue in real estate, there are certain conditions which are specified in the revenue recognition standard as well. Now, how that becomes relevant is because that standard is still applicable to all the entities. The guidance note will just guide you for specific real estate entity, but overall the main guiding factor will still be the accounting standard 9, which is revenue recognition. So what does that standard say? We will discuss little later. But then I'll just touch upon the main aspects of it. That the point of time at which all significant risks and rewards of ownership can be considered as transferred is determined. 1 minute. As transferred is required to be determined on the basis of terms and conditions of the agreement for sale. Now, all the agreements are drafted by different legal persons. So it lot depends upon the drafting of the agreement. So we have to determine that at which point the significant risks and rewards of ownership can be considered as transferred. Whether it is like, for example, 50% of the payment is received, or 50% of construction is done, or 50% is not a landmark number. It is just an example I'm giving. Or the total project is suppose under a certain stage, and we will say that at this particular point of time the risks and rewards are getting transferred. All this is a subject matter of consideration. Now, in case of real estate sales, the seller usually enters into, now what is usually which is happening with the builders nowadays is that we all know that when you go and buy a flat, when you give some advance payment, so the builder will always say if you pay 20%, at least 20% of the total consideration, then you can register the agreement. So nowadays, to avoid future litigations and future problems with the builders, always even the end user, agrees for this kind of transaction, agrees for this kind of arrangement, that he pays some amount, 20% or 25%, whatever is the case. And then the agreement is being entered and registered by the builder with the entity. Rather, there is some mandate also that if you pay 20 or 25%, you have to, register the agreement. So the agreement for sale is also considered to have the effect of transferring all significant risks and rewards of ownership to the buyer, provided the agreement is legally enforceable and subject to the satisfaction. By legally enforceable, we are saying if only the agreement is not entered, but it is registered also, and stamp duty is also paid, then it becomes legally enforceable. Otherwise, it will just an agreement. And subject to satisfaction of conditions which signify transferring of significant risks and rewards, even though the legal title is not transferred or the possession of the real estate is not given to the buyer. We all know that under construction projects are there. So possession of real estate question does not arise. It will arise only when the construction gets completed. So we can say that the risks and rewards are actually, now in the second paragraph, you can see once the seller has transferred all the significant risks and rewards to the buyer, any acts on the real estate performed by the seller are in substance performed on behalf of the buyer in the manner similar to a contractor. For example, now the builder steps into the shoes of the contractor, because now you have become an owner after the registration has happened, and the builder is now accountable to you as a buyer. He will become a contractor for you. As if he is constructing a flat on your behalf, he's just rendering services to you. So it is that kind of particular contract. So the revenue recognition then becomes the basically percentage of completion method comes into place here, how we have seen in case of AS7 construction contracts. So then when do we follow that AS7 construction contracts? When there is a case of construction. Suppose you have given a particular site for construction to a contractor. Similar situation arises in this particular case. So percentage of completion becomes applicable there. Now, as we discussed in the past, that AS9 applicability for real estate project. What are the application of principles there? Now, application of principles of AS9 in respect of sale of goods requires recognition of revenues on completion of the transaction or activity when the revenue recognition process in respect of real estate project is completed. This is basically relevant in case of sale of plots of land without any development, because in that case, it will form part of goods. Otherwise, if under construction flat is there, then it becomes part of sale of services. It is not sale of goods. So in these two difference needs to be understood by the auditors, that when the project is revenue recognition should happen. So in case of sale of plots of land, there is no development. So upfront, when the sale of plot of land has happened, the registration of the land happens, it is considered as sale. And total value is recognized as consideration. Now, completion of revenue recognition process is usually identified when the following conditions are satisfied. So, as you can see, there are 4 or 5 conditions given. The seller has transferred to the buyer all significant risks, which we have discussed already, and the seller retains no effective control of the real estate to a degree so usually associated with ownership. Seller has effectively handed over possession of the real estate unit to the buyer forming part of the transaction. No significant uncertainty exists regarding the amount of consideration that will be derived from the real estate sales, and it is not unreasonable to expect ultimate collection of revenue from buyers. Now, this also happens in case of sale of flats also. How? Because there are certain builders who still recognize revenue on total completion method, and they do not follow project completion method, and it is not barred also. Still, there are many builders who are not following project completion method because they take this, these conditions into their accounting policies, and they recognize revenue only when they hand over possession of the real estate. Basically, if they get a occupation certificate, receipt of occupancy certificate can be the trigger point of recognition of revenue. It is still prevalent in many cases. Many mid-sized builders are using this kind of still accounting policy, whereas large builders largely use project completion method. Percentage completion method. So these 4 aspects become relevant for that. Now, now we go to the percentage completion method. When this percentage completion method should be applied in the accounting of all real estate transactions or activities where the economic substance is similar to construction contracts. As we already discussed, now still there are certain indicators of such transactions or activities. What are those indicators? That the duration of such project is beyond 12 months. Obviously, if a particular project is so small that within 12 months of your account auditing period, it becomes completed, which is actually practically not possible, then there is no question of percentage completion method or total completion method because it comes within your audit period. But we are discussing about projects which are beyond 12 months, and the project commencement date and project completion date fall into different accounting periods, which is very obvious in case of real estates. In most of the cases, this will happen. Now, most features of the projects are common to construction contracts, that is land development, structural engineering, architectural design, construction, all. Where individual units of projects are contracted to be developed to different buyers. These are interdependent upon or interrelated to completion of a number of common activities. Because there might be, I already discussed this, there will be a cluster of 6 buildings which will use a lot of common activities. So, for example, common security, common amenities, common, lot of things can be common for them. So in that case also, this percentage completion becomes relevant, that how much percentage completion has happened. Suppose one particular building is completed where out of 6 buildings, then 1/5 of the project revenue can be recognized. I'm just taking a very hypothetical example. Now, construction or development activities form a significant proportion of the project activity. Obviously, that is the most significant rather. Now, application of percentage completion method. Now, this method is applied when outcome of a real estate project can be estimated reliably and certain conditions are satisfied. It is not that from day one we will fall into percentage completion method. There has to be a certain point where percentage completion method will become applicable. It's not that we have undertaken a project and right from day one we will start. Suppose you have undertaken a project on 1st of March 2023 or 22, then it is not that for 12 30 days we will recognize some revenue or whatever. It's not possible. There has to be some landmarks which needs to be completed to start this recognition of revenue. So when the stage will come, these are the five important conditions that all critical approvals for commencement are in place. Like commencement certificate should be in place, plans should be properly passed, environmental clearance should have been obtained. Nowadays, environmental clearance plays a very significant role. So, being an auditor, we should always demand these important, permissions which are there. Like local municipal corporations issue commencement certificates. But suppose commencement certificate has been given, but environmental clearance is stuck. So, in that case, if the project starts, it will get stalled. So, this becomes very important for auditors to look into. Then project revenues can be estimated reliably. There has to be certain landmarks, like for example, a builder should have decided that, this project revenue, how will the project revenue be calculated? What rate will be considered? Or basic rate of selling will be already specified by the builder. Where that will be the ready reckoner rates which will be available to you. Project costs to complete the project can be measured reliably. All these projects nowadays it is slightly easy to determine all this because now in RERA, before they take RERA registration or in to the RERA authorities, all these things have to be submitted. So that RERA documents becomes very important part for you to understand the various these aspects like project revenue, estimated project costs, or estimated project costs attributable to project. Rather, these certificates are being taken by statutory auditors in many cases. So you have already worked upon these particular numbers while when the project starts. So these are landmark the benchmarks which are available to the auditors already. Now, the guidance note 2016 has mandated that an entity can start recognizing revenue on a percentage of completion basis only when 25% of construction and development cost of project has been incurred, 25% of saleable project area secured by the contract, and 10% of contract consideration as per the agreements of sale has been realized. So this is these 2-3 landmark. Now actually this is relevant or not, it's not so because these are in guidance note 2016, which was mandated for entities on which Ind AS is applicable. So this was not there in guidance note which was issued in 2012. So whether this, but still it can become a form part of the basis of you to decide whether the percentage of completion basis can be applied now or not, whether the stage has arrived or not. So this is a guidance available. Now, there are certain things where, as auditors, our role becomes important, that the recognition of project revenue by reference to the stage of completion of project activity should not at any point exceed the estimated total revenues from eligible contracts. Basically, what they mean to say that whatever the estimated total revenues are there, that is already been estimated. So project revenues in between the stages, it will not happen that it will exceed the total revenue which has been estimated. So this should be taken care of. If suppose some builders are to obtain other benefits of various, there can be some compulsions like for some to obtain some loans or something, they will inflate the revenue and show. So this you can always compare with the total estimated revenue, and you can question the auditee that how this is exceeding the total estimated total revenue. Then when it is probable that total project costs will exceed total eligible project revenues, the expected loss should be recognized as an expense immediately. So it means that the cost overrun has happened. So a person who is the project revenues have been estimated, and my actual project cost which is incurred is already exceeded that. So in that case, as we all know, we follow the policy of recognition of loss immediately as and when it is incurred. So conservatism principles still apply to these particular cases. So amount of such a loss is determined irrespective of commencement of project work or stage of completion of project activity. Very sorry. Now, the percentage of completion method is applied on cumulative basis in each reporting period to the current estimates of project revenues and project costs. So it is a cumulative working which happens that suppose in the previous year you have recognized 35% of revenue in project completion. So when you work in the next year, you will consider that 35% also is a cumulative thing. And suppose now you have completed 70%. So whatever on a cumulative basis you have already recognized, you will only recognize the difference. So that is a very natural thing. Still, it has been specified in the standard. Now, this happened to the, now we discussed about the projects under development. Now, there are some important aspects of even of sale of plots. There can be two parts of sale of plots. One can be sale of plots without any development. This we already discussed. It will be recognized just as a total completion method that, the like sale of goods under AS9. So risks and rewards are transferred, land agreement is registered, just recognize the revenue. And cost is, of course, specified in the purchase agreement. So this is simple sale purchase thing. Now, sale of developed plots. In case of developed plots, again, the project completion or percentage completion method comes into picture. If it is taking a longer time to develop a plot, you can go into project completion or total completion, whichever is, the policies of the company is. It is like that. Now, there is one aspect which is very commonly seen in case of builders is transferable development rights. So we just mentioned in the beginning only that development rights are transferable. They can be either used to develop a property, they can be sold upfront in the market, they can be exchanged. So there are various different ways these are treated. So transferable development rights are generally acquired in different ways. It can be a direct purchase. A person can buy TDRs, cost of purchases or amount spent on development. So here you will pay a direct cost, which will appear in your books of accounts. That cost you will take. Development and construction of built up area. The cost of acquisition should be added to the project cost. Suppose you are utilizing that purchased TDR in development of a particular project. So then that per TDR cost will be added to the cost of acquisition and will be added, is the cost of acquisition of that TDR will be added to the project cost. It becomes part of your work in progress. Now, it may so happen that you giving up of rights over existing structures or open land. Suppose you are building a particular project, you are leaving some land for the common good, like you are leaving a broadening of the adjoining road. You leave the land, or you give some portion of the land for development of a school as required by the municipal authorities, or you have given it for a park to be used by the common people. So then what you are doing, you are actually giving up rights over an existing structure. So development rights should be recorded either at fair value or at the because you will not know what is the value of that land, because you just as a piece of land, you are giving your right over that. So how that will be determined? There is some fair market value which is available. In ready reckoner rates would be available, or even the municipal authorities will give you a certificate by way of certificate of TDR that this is land which you have left as open land, or you have given over the existing structure. This is the value which is attributable to this particular right. So that value will be your fair values, and then or at the net book value of the portion of asset given up, whichever is less. So whichever is less is always the condition which is there in case of revenue recognition. For this purpose, fair market value can be determined by reference either to asset or portion thereof given up, or to the fair market value of the rights acquired, whichever is more clearly evident. Now, when development rights are utilized in a real estate project by an enterprise, the cost of acquisition should be added to the project costs. This we have already discussed. Whatever cost is there, it will be added to the project cost. When development rights are sold or transferred, revenue should be recognized when both the following conditions are fulfilled. Title to the development rights is transferred to the buyer. and it is not unreasonable to expect ultimate realization of revenue. So this is a realization of revenue is of course primary, because if that does not happen, then there is nothing considered as sold actually. So when where development rights acquired in exchange of an asset, unlike the existing guidance, the guidance note on real estate requires measurement of same in accordance with principles. This is the picture where the Ind AS comes into picture. Wherever the Ind AS is applicable, there the guidance is available with in Ind AS 38 of intangible assets, which require fair value accounting. So there everything is on fair value. We all are aware of it. Now there are certain disclosures which are required for real estate entities. So we should always take care of these disclosures are being provided in the financial statements of the entities or not. An enterprise should also disclose each of the following for projects in progress at the end of the reporting period. So of course, other than sales, project costs, those are though form part of the financial statements that will definitely come. That will be part of your P&L and balance sheet. But some disclosures are still required other than your cost, the figures which are part of financial statements are that the aggregate amount of costs incurred and profits recognized to date, they should be separately disclosed. Amount of advances received, basically the advances which you have received from the customers, like some progressive payments you receive from the customers, even though they were not recognized as revenue, they should be separately shown. It is now shown as contract revenues, like that. The amount of work in progress and the value of inventories. So inventories, work in progress is one part and inventories is another part. Inventories can be of work in progress as well as inventories can be of finished goods. That is the case even in manufacturing industries. And excess of revenue recognized over actual bills raised. So this is unbilled revenue. It has happened that it may so happen that some people, some customers pay you more than actually bill raised to gain some benefit in terms of some amenities or cost reductions. So this kind of thing may happen. So these are unbilled revenue. Even though it is not billed, it is being received. So these have to be disclosed separately. Now, I will very briefly touch upon Ind AS, and I think we have time. Can someone tell me? Yeah, I think we have time. Okay. So after Ind AS 115 became applicable, the entities where Ind AS is applicable, this has become the crux of the revenue recognition or the basically mainly for revenue recognition, this is relevant. So the core principle of Ind AS is that revenue should be recognized from the transfer of goods or services to a customer in an amount that reflects the consideration that the entity expects to be entitled to in exchange for the goods or services. So it's actual thing which entity is entitled to. So Ind AS 115 says it gives 5 important steps for recognition of revenue. So revenue from contracts with customers. So very much this even real estate industry comes into picture in Ind AS 115 also. Is step 1 is identify the contracts with the customer. That is the starting point of revenue recognition. Identify the separate performance obligations. So in case of real estate, there is a single performance obligation, which is that constructing of the flat along with, maybe there might be separate performance obligations like construction of flat is one performance obligation. Construction of common amenities is another performance obligation, but they are interdependent on each other. So even though they are separate, it will be considered as one performance obligation only, because without amenities, it may not be a complete performance obligation. Then determine the transaction price. So this is very much determinable, because in real estate the transaction price is determined at the time when the agreement is entered into. It is not a variable thing. Then allocate the transaction price to the performance obligations. So this is also very in real estate industry, it is very straightforward, because the one performance obligation is there and single transaction price is there. So this allocation is not at all difficult. It is very much established when the contract is entered into. Step 5 is recognize revenue when or a performance obligation is satisfied. So here now a little tricky situation comes, because this particular standard says that you have to recognize revenue when a performance obligation is satisfied. So now in case of real estate, the performance obligation gets satisfied only when the flat is completed or the possession is handed over to the end customer. So does it mean that you can only recognize revenue on total completion method? No, it is not that actually. But a plain reading of the Ind AS will suggest that only. So many builders have taken this as their basis, because now builders are all large entities. Most of them are large entities. So in many builders' cases, Ind AS 115 has already become applicable. So there, they take pretense of this particular thing, and they say that, we will follow total completion method, as in when the building will be completed, we get the occupancy certificate, then only we will recognize the revenue. But our institute has issued if you see the second paragraph, the Institute of Chartered Accountants has clarified via a press release dated 20th July 2018 that Ind AS does allow recognition of revenue using percentage of completion method, and has explicit and specific requirements to recognize revenue where performance obligation is specified over a period of time. So they say that Ind AS specifies that obligation is satisfied over a period of time, then also this particular standard becomes applicable. So with the introduction of Ind AS 115, the real estate entities will need to determine revenue recognition on the basis of whether performance obligations is satisfied over time or at a point in time. So over time means over a period of time. For example, a building takes to complete 3 years. 3 years they need to complete. I'm just taking a benchmark period. 3 years they need to complete, so that over a period of 3 years the revenue is to be recognized, or at a point in time means as and when the building gets completed. So there may be a change in the accounting system of real estate entities for recognizing revenues arising out of contract with customers. The actual impact on each company will depend on their specific customer contracts and how they will apply the standard and the existing standards. So what they mean to say here is that the agreements have to be looked into. If the agreements are drafted in such a manner that, most of the agreements are actually drafted in such a manner that where the schedule is given of payment. For example, they say if 10% of work is get completed, you pay this much. So it is specified, the revenue is already specified in the agreement. If suppose 20% is completed on the completion of plinth, you pay this much. So this was there in before also, and this is there now also. In the agreements, most of the builders specify the schedule of payment. So there, it becomes difficult it becomes very easy rather to recognize revenue over time. So at a point in time is not necessary. So we can see the completion, we can see the certificate by the architect that at the year end, when you are sitting on 31st March 22 or 23, when you will be auditing, the certificate of architect will be seen where they will say that 50% work is completed. And then you will compare that how much revenue has been recognized by the builder. If suppose against 50%, suppose 50% revenue is already recovered by the builder, so you can go by percentage completion method also. But it depends on the builder also that if they want to go by total completion method, then there is no bar on that. And many builders are still doing it. Now, Ind AS 115, while making certain modifications in accounting system for revenue recognition, still keeps the provision for percentage of completion method as an option to real estate entities. Thus, recognition of revenue as construction progresses is possible, considering the prevalent long-established legal system, facts and circumstances of the individual contract. As I already mentioned, that schedule of payments will be there. Then you will have benchmark, you will have the mandate available with you with the help of architect certificate and all that, which will help you in auditing that how much revenue is recognized as proper or not, cost recognition is proper or not. So that will help you in all that. So we are of the view that with the recent amendment of Specific Relief Act, the real estate entity will have an enforceable right to demand or retain payment for performance completed where there is a breach by the customer. Because now this is only for the protection of the builder. Because if the builder specifies the schedule of payment, then even he can demand that amount from the customer that now my my this much performance obligation is completed, you pay me this much. So that will help the builder also in that case. So you are the auditing the company, so you have to look into the interests of the company also. So in that case, this becomes relevant. Now, therefore, in view of relevant provisions of this standard and the Act and Amendment Act, the performance obligations of real estate entities do not create an asset for alternative use, and the entity may have enforceable right to payment for performance completed to date, depending on the customer documents entered into by the entity. So basically, it talks about the agreements to sell. Now, what are the major audit issues which we face while auditing real estate entities? It is cost allocation in case of entities executing multiple projects, phase-wise construction, common area cost allocation, compensations, SRA costs where applicable. So these are some audit issues which we might face because some lot of costs are allocated to the projects. So we have to be very careful that what costs are allocated, whether they are appropriate to be allocated to the particular project or not. Then clubhouse is a common cost. So the cost incurred for clubhouse, that has to be divided area wise into various buildings. For example, if you incur 5 crores to construct a clubhouse, and you have two buildings have already been constructed and 3 are already or under construction. So now what happens that the proper allocation of that clubhouse cost has to happen between all those 5 buildings. Otherwise, it will be not justified to, because at a point of time when suppose the year has ended and clubhouse has been already constructed at 5 crores, we can't allocate that 5 crores to a building which is completed by 31st March. We have to keep that cost separate for the buildings which are under construction also, because that cost will be loaded to buildings under construction also. So a suitable basis has to be divided. Most of the cases, it is area of construction only. So area of basically a percentage of completion table has to be made, where I wish I could have made some example to show you, but I think by paucity of time, it was not possible. So I didn't go into that, but probably at some later point of time, you will be seeing such examples. So there, suppose building A, B, C, D, E are there. So areas which are A, B, C, D, E are there, you will be specified in a table. So there, the common cost, we know that it is 5 crores. So area, we know it is suppose 100 square feet, 200 square feet, 300 square feet, or whatever it is. So based on that 100 divided by total area, the clubhouse cost will be allocated to the building completed. Remaining will form part of work in progress, and it will be allocated at a subsequent point of time. Clear? So this is the thing which I wanted to tell. That revenue recognition as milestones are dependent on reports of other technical experts with respect to area completed total, because we are not so expert to determine. If you go on a site, being a auditor, you are completely unaware of the percentage of completion, what has happened. Because you will see plain land and building under construction, you are not technically expert to determine that. So we will have to depend on the certificates from architects and engineers, and we have to rely on that certificate. Though we should apply our good sense also that whatever architect certificate is showing is actually visible on the site or not. Then complicated development agreements between parties with respect to consideration, etc., payable at various milestones or stages. There can be lot of conditions which are there in the development agreements also. For example, there are some development agreements which says that at the time when the agreement is entered, certain consideration is payable. When some flats will be built and some portion will be sold or allocated to the person who is selling the development right, then at that point of stage, this certain consideration will be recognized. So all those have to be read very. So my suggestion is we should always read the development agreement, write their important aspects, write the milestones at which or what amount is payable, and then determine what is the actual consideration which should be recognized now at the stage of your audit. So this is something which is very critical, because this can, this can actually affect the financial statements to a great extent. Because certain consideration which has to be recognized has not been recognized, then it will be understatement of revenue. And if some consideration which should not have been recognized at particular stage and it is recognized, then obviously it is overstatement of revenue. So we have to be really very careful in these cases. RERA compliances requires expertise in the regulated regulations. So I suggest people who are into audit of real estate, they should really read RERA compliance, RERA regulations, and some important RERA compliances should also be kept in mind while auditing. Then the risks which are there is income tax consideration driven revenue recognition. This is a very important risk because builders always have that thing in mind that I recognize certain revenue, my income tax payable will be this much. So, based on that, they try to manipulate their accounts. They will try, though good builders don't try, but in some cases it may so happen. So here you have to use your expert judgment, and you have to be very careful when the financial statements are drawn that proper consideration has been taken or not, proper cost has been allocated or not, over cost allocation has not happened. Related party transactions play a very, very significant role in real estate transactions because, the sometimes costs are inflated by way of paying contractual payments, salaries, rents, various other costs are being incurred. So we have to be very careful that those actually are genuine or not. So these things needs to be taken care of. Those are there in other audits also, but in case of builders, they are more prevalent, I would say. Now, this is a small audit checklist which I have just found somewhere. So I thought I will share with you people. Is that we should prepare this kind of checklist, whether what is the status of a particular project, whether it is completed or still work in progress is there, what is the percentage of completion, derive the percentage of completion to find revenue recognition. Please bear with the spelling, it's there. It's probably I just picked it from the table. Then purchases, bills with quantity is entered in inward. So these are things which should guide your team members who are, doing the basic audit. Then labor bills certified by authority and has it taken care of TDS, because TDS forms because on the progressive payments, TDS has to be deducted. So this forms part of audit, whether these TDS has been properly. Some people don't deduct TDS at the time of paying advance. They just pay at the time of receiving bills, which is wrong. We all know that. In the payment part, bank payment, cash payments without exceeding the 20,000 single payment, and now it is 10,000 actually. So all this is there. Then assets, fixed asset register. These are all basically the common checklist which is there for other audits also. Then insurance has coverage taken for sites. So sometimes this becomes very important because if you have not taken site workers insurance, your work can get stalled. So you have to always take care of whether site workers are insured or not, because if any mishap happened, then it can incur actually huge costs on the builder. So that will, be of significant importance to you. Then payroll, muster rules of sites and payments, then bill of materials as good as quotation to compare with final bill on completion, whether joint development agreements or construction. So you can see that in this particular checklist. And I think that's all for me now, and happy auditing. I hope that this has brought some, guidance to people who are into real estate auditing. Thank you. Thanks a lot. Over to WMEC team. Chetna, I think you are on mute.
Chetna ma'am, we are not able to hear you.
Am I audible now? Okay. Yeah. So, CA Meenakshi ma'am, thank you so much. Thank you for such an insightful session on audit of real estate entities. Actually, you have covered entire whole topic very well with context to RERA as well as there's Indes and guidance note. You have covered types of real estate and what are the what should be included, what does not include in construction cost, total completion method, percentage completion method, and major audit issues. So you have covered very well, ma'am. But still, we have couple of questions. So I would like to request you to take one by one and just answer the doubts and queries of our members with your rich
Sure, I'll
experience.
try my best. I'll try my best.
Yeah, thank you, ma'am. So, ma'am, first question is on a receipt of OC, should revenue be recognized for unsold inventory at SWV?
No. For receipt of OC does not mean that unsold revenue should be recognized. That unsold revenue, unsold inventory is something which is for the income tax part. Because the income tax specifies that, if there is some unsold inventory, then some revenue has to be allocated and offered for taxation. But for auditing of financial statements, that unsold revenue cannot be, given some revenue and revenue will be recognized. It is only on sold inventory.
Okay. Thank you, ma'am. And second question is IMO unbilled revenue at the end of month or year is the portion of revenue for which work is completed but billing is yet to be made due to reason like billing cycle or not completion of milestone for billing as per contract. That portion need to be recognized as sale in the books as unbilled revenue. The amount received extra from clients and are the advances and not the billed revenue.
Yeah, like unbilled revenue means that only that for which the revenue for which the invoice is not been raised, basically. So that is why it is called unbilled revenue. So the amount is received, but the auditee or the entity has not yet made an invoice. So that is what is called unbilled revenue. So that definitely forms part of the revenue, but it will be disclosed in financial statement as unbilled revenue.
Okay. Yeah, hope members are satisfied with ma'am's answer. And yeah, ma'am, there is so much, they all members are requesting for the PPT presentation. So they want to share with them. So admin, please help.
I'll share with the WMEC team, and if they whatever feel appropriate, they will do it.
Okay. Thank you.
Thank you so much.
Yeah, I would like to thank once again CA Meenakshi Gupta ma'am for today's wonderful session and answering the question of audience members.
Thanks, my pleasure.
Thank you, ma'am. I would also like to thank our chairperson of WMAC, Women Members Empowerment Committee, CA Priya Kumar ma'am, and our vice chairperson of WMAC, CA Preeti Paras Savla ma'am, for organizing this wonderful session. With this note, I will hand over to CA Vardhini ma'am, who would now introduce the next speaker. Thank you.
Good evening, everyone. Happy New Year to you all. I'm happy to introduce the next speaker, Priyanka Tibriwala. She's now working in Boston Consulting Group, which is the top 3 consulting firms in the world. She was previously working as a senior consultant in Ernst & Young under management consulting. She's co-authored a book called as Automation Conundrum, which is a book on the evolutionary stages of intelligent automation. She's had a varied experience in management consulting. For instance, she has implemented process improvement for an international beverage firm. She's led change management for a consumer goods company. She has a long list of achievements, and in her educational side, she's completed her company secretaryship in 2017, chartered accountancy in 2018, Bachelor of Law in 2019, postgraduate diploma in actuarial sciences in 2020 from the University of Leicester, UK. She's been a lead speaker in the Women's National Conference of the ICAI. She was a state level champion for archery. She's won tournaments in the annual inter-school handball competitions. She's also led the EY Ripples movement, which is called the Leaders for Tomorrow for uplifting of the underprivileged. I extend my warm welcome to you, Priyanka, and looking forward to your talk. Thank you.
Thank you so much for the kind. Am I audible?
Yes, little bit louder if possible.
Okay. Thank you so much for the kind words, Bharati. And I would like to extend my gratitude to WMEC and ICAI for having me over and being able to sort of contribute my knowledge as far as possible to the Women Committee and ICAI as a honestly, it was my New Year resolution to start with a very happy quality. It was my New Year resolution to be able to contribute to the Women Council and the committee, and my fellow group members as a part of my New Year resolution. And this platform sort of helps me kickstart the same. So I'm glad I'm able to do that in the very second week or by the first week of the New Year itself. So as we go into the future, the topic that I'm going to talk about becomes even more important, which is automation. And I'm sure everybody has their own different notions about what automation is, what intelligent automation is, what artificial intelligence is. There are multiple buzzwords in the industry, about chatbots and bots and metaverse, etc. So my agenda for today's session is going to be number one, to get you acquainted with all the buzzwords in the industry, to help you basically understand what the automation journey goes like. Followed by we as chartered accountants, how we could leverage upon automation in our journey ahead, and then eventually answer question about automation, what comes across majorly that I come across in my journey as when I'm taking sessions past as well. So I will try to sort of answer those questions in advance, gauge through this. So that's my agenda for the session. That being said, I'll quickly share my screen. Let me know once my screen is visible. Right. So could someone please endorse? Please visible. Super. All right. So starting with the main question that all of us have, it's the new bubble, the new buzzword that all of us keep thinking about. What is exactly intelligent automation? So before we get into the nitty-gritties and the technical side of it, of what exactly is intelligent automation, what are the potential use cases that we could use in our day in day out activities, would want to highlight a few examples that could get us on platform. On the same platform and on the same page where all of us basically use this technology in our day in, day out activities. And as I talk, I'm sure some of you already know about where, when are this technology. But let's start with a few examples that you feel a little easy to the topic. Starting with the easiest, the different examples where we use automation per se is social media. I think all of us are using social media in our day in, day out activities. But what we notice is, starting with your Instagram and your Facebook and your YouTube, when you go about using these particular platforms, they're basically catering into what your likes are, what your dislikes are, and once you go about your, let's say, your Instagram reels or your Facebook notifications or advertisements, etc., they're basically getting customized as per your change. Now, how is that taking place? That is taking place basis intelligent automation, which is via artificial intelligence, right? So, sorry. Is this a little more clear? I will try to speak as loud as possible. So, all right. Continuing. As we all use the social media in our day-to-day activities, like I said, we have all of these social media platforms that are sort of capturing our likes and dislikes. Then, along with the capturing, there's a database in the past that's formed, and basis that database, certain rules that are put in, certain technological advances that are put into that particular database. I will explain how does that work, but and basis that you have notifications about what sort of movies do you want to watch, or what sort of products you want to buy, or what sort of different outings or locations do you want to get to, etc. So you would have sort of noticed this in your day-to-day activity. So, and I'm sure all of you are know. So Also, when you like, let's say, use your Gmail and when you like type in certain messages, there are certain text that comes in advance. So, for example, let's say if you're typing how, then how are you? Hope you're doing well. You have certain messages that come ahead in advance. Then you just have to press a tab so you can start using those languages, etc. So again, it's the language database that gets stored into the backend, and then it's giving you all the suggestions. So I'm sure, although you feel it's a bubble and it's a topic that we should use in our day-to-day activities, but somehow unknowingly or knowingly we are already using technology and artificial intelligence in our day-to-day lives. Going to the next example, where we have our music channels, right? Whether it's Wing, whether it's Ghana, or it's your Spotify, all of these basically, create your own playlist. You listen to certain songs and then, day in, day out, and then based on those songs, there's an automatic playlist created for yourself. How does that take place? Basically, once you start listening to, let's say, 10 songs or maybe 20 songs, so those 20 songs are actually stored into a database, and then, using certain artificial intelligence rules, it basically, accumulates in terms of what genre of music you like, and it creates a playlist. So that, again, uses technology or artificial intelligence in play. The reason why I'm quoting these examples, guys, is to basically get you a little ease with the topic. Because once we get into the technology or the nitty-gritty side of it, it might seem a little easier to get well versed with, real life examples. You're able to sort of correlate in terms of how things take place at the back end. But at the front end, when we sort of see things happening in a day, let's say Google Maps. So if we want to go from one place to another, so these are something that I think there would be rarely anybody who's attending the session who wouldn't have used these particular platforms. If you want to go from one place to another, there's a backend database of locations that are stored, and then it hits the main database as soon as you enter the two locations, guiding through the traffic, routing through extreme traffic zone versus your lesser traffic zone, going through the bridge, under the bridge, etc. So all of this is basically stored database, and then of course you have your satellites connected through, routing you through the globe as well. So again, technology playing a role here. Going into a little deeper technology, you obviously, apart from your social media and your Google Maps and your mobile applications, etc., there are certain technology which is advanced. So you have, let's say, your self-driving cars, as all of you all know. Along with self-driving cars, you also have your machinery that can work on its own. You have your self-driving technology factories. You have your driven. So Amazon has an entire store that basically is run by robots. It has an entire factory that's basically a warehouse that's run by robots. You have cars, Tesla, as all of you all are aware of, where there is a self-driving technology that runs in place. So how does it exactly comes across? How does it exactly go about using this technology? How do cars sort of self-drive themselves? How do they navigate through obstacles? How do they notice the signal color? And how is it able to stop at crossroads, etc.? This all basically, again, is an example of advanced technology. Going into, let's say, medicine. So, there's something called as retinology, where an artificial intelligence can actually detect whether a person has diabetes or not through your eyes. And of course, technology has made much more advanced the field of medicine. So as you can see, we have multiple examples here, and I could go on to the next part. Just talk about examples, but that's not really our agenda here. But what I'm trying to put across here is that there is no particular domain that technology is not touched upon so far. I think every industry has been touched upon by technology in some way or the other. Although the touched upon technology as a domain. So, and I'm sure all of you all have been well versed whether thanks, Ayaz. So there wouldn't be any particular domain that technology has not been touched upon. In any field that you have sort of been experienced, whether you're working in your audit or your tax or your consulting or your investment banking, your finance, or even your automobile or real estate industry. For example, Meenakshi ma'am basically quoted a lot of rules and regulations as compared to the real estate audit. Those had a huge repository of multiple set of rules and regulations that need to be followed as a purpose of audit. I would give you an example eventually once we get into the technical side of it, how technology could leverage upon to help audit real estate and make life much more easier. Going into the next part, which basically talks about the industry buzzwords. So I'm sure you all would have heard. So at every session I try to talk about the new industry buzzword, the new one being metaverse. I don't know how many of you all are aware about the term metaverse, and I could actually give you a very technical definition that it's a very spatial computing platform which gives you a real life experience in an alternative real time experience. But let me again quote a few examples and explain what exactly metaverse is. So metaverse basically is talking about, and again an example of advanced technology, again giving you a gist of where you're exactly using it in your day-in-day out activity. Although someone comes up to you and says that metaverse, and you might feel that it's a very high level technological jargon. But once you know these real life examples, you can actually say that what, I know metaverse, I'm actually using it in my day-to-day. So to give you a few examples of metaverse, obviously the ones who actually are into avid gaming and play the Wii or the your visual representation, your VR or your AR, know what metaverse is. You wear those Google glasses and you're in a different world altogether. But apart from gaming and the simulation that actually takes place, metaverse can actually be used in your real life working example as well. As all of you all know that COVID had hit us and all of us were working from home. And we all felt the need to sort of work from office, but at the same time we wanted to keep ourselves safe and did not want to step out. So that's when metaverse sort of stepped in. Where, for example, you wear those Google glasses and then you basically step into a real-time world and start working with a team, and you feel like you were in the same working room. You can high-five with your colleagues, you can eat your lunch together, you use your whiteboard, etc. That's what metaverse does to you. How does that happen is something I'm going to soon talk about, but I'm still building upon what exactly metaverse is by taking these examples. So metaverse basically takes you into that entire technological space and era where even sitting at home, you feel like you are actually working in an office environment and going around and talking about different situations in the office using the same whiteboard. The second example would be all the music lovers. If you all know Travis Scott, he's a famous rapper. You could attend music concerts with metaverse, where you actually feel like you're entering into a stage with Travis Scott performing with thousands of audience, everybody rooting. You could actually feel the vibration and the cheer, and Travis Scott performing right into eye. You could basically high-five the singer. So, although it's not real, you're not physically present there, but the entire look and feel is such that you feel like you're attending, the music concert. Another example of metaverse would be, for example, if you're performing certain surgeries, etc. So in real life right now, what is happening, interns basically watch senior surgeons perform certain surgeries, and only once at an advanced level they do get to practice, but that's also limited. And then over a period of time, as and when cases come, they get to experience. Versus come to metaverse where the training becomes much more easier. They can actually perform surgeries in real life. They actually feel like they're actually performing a surgery, doing the stitching and performing surgeries where they can actually get into the technical nitty-gritty. So what are the complications that come in? With the help of metaverse, the training becomes much more advanced, faster, and builds upon experience much faster as compared to the real life where people are actually waiting for the chance to perform real life surgeries, be aware, be observant, and build upon experience over a period of let's say 10 to 15 years. Coming to another example, let's say in the automobile industry, when you have certain car issues or you're working upon, let's say, developing a new car engine, etc. Everything has to be physically bought. Your spare parts, your car repairing, everything has to be physically bought. With let's say in the world of metaverse, you can actually go and design a car put in the spare part, do certain permutation combinations, and feel that have the look and feel of the car, and realize the car is actually working. Also, your other experiences like your skydiving, your scuba diving, like all of this comes with the entertainment space. So again, giving examples of this basically, is bringing you to the fact that although there are certain restrictions in the recent times, all of those can be overcome with metaverse, with technology. We are basically going ahead. Um, although I've given you multiple examples, I'm sure all of you are inquisitive to understand how does this exactly take place. Wouldn't go into very technical details, but at the same time, we'll try to give you an insight as far as possible of how the entire metaverse industry, IoT, Internet of Things, or your artificial intelligence actually take place in the backend. So it's basically your core step. Starting with the very first step towards automation is RPA, which we call as robotic process automation. We will deep dive further into this topic. But robotic process automation is basically a technology that can be used in our day in, day out activities. Quoting again the example of the entire topic that Nakshi ma'am spoke about. Let's say audit of real estate, which have multiple rules, which has multiple regulations that needs to be followed, and then you had to ask her, and she answered certain questions, but those are rule based, right? We could actually have a robotic process automation bot that is put up with all of these details that are stored in the bot, and that could actually help you answer your questions regarding the audit of real estate. I'll soon explain how, but that's the first step. So anything that is rule-based, anything that's repetitive, anything that's monotonous is where your robotic process automation basically steps in. And it's literally in your day in, day out audit and tax activities as well, and also other industrial spaces, but I'm quoting these examples because these would be relevant. Once you put a little bit of intelligence into your robotic process automation, which is your machine learning and your natural language processing. Like I gave examples, now I'll start quoting examples earlier so you can actually relate with what's actually happening at the back. So, for example, let's say you have typed a lot of Google emails, etc., and that's getting stored into your machine. And then your machine learning and your natural language processing can actually use multiple languages apart from English as well, whether it can be Japanese or Spanish or Chinese, it can be multiple languages. So it basically processes those languages and then anticipates what you want to type further and gives suggestions of what you really want to put across. Is where your cognitive RP, that is your cognitive robotic process automation steps in, and use machine learning and natural language processing. Talking about the platforms, we would quickly just call out the platforms, not that we have to immediately get deep dive into how the platform works, but Blue Prism, Automation Anywhere, UiPath are the common industry platforms that are very heavily used in the industry when it comes to robotic process automation, versus Argo and Workfusion when it comes to cognitive RPA. I try to quote as far as possible as many examples that do not get lost in the technical space. So I'm trying to sort of go back to the original example. When you put a little more intelligence into cognitive RPA comes chatbots. I'm sure all of y'all have used chatbots, whether it's for a shopping platform or whether it's for a complaint platform. There are chatbots that can start conversing with human beings. And since y'all have already spent some time on real estate audit, so for example, let's say instead of all of y'all knowing what real estate audit rules comprise of, we could actually have a chatbot that is already aware of certain basic rules that is applicable to real estate audit, answer you certain questions, which is basis the repository. That would be basically rule-based, no intelligence would do it, but it could actually answer certain questions. Basis rules. So how does your NDS work? How does your basic rules and regulations work? And skip to the real life example, you obviously have certain chatbots. Zara has a chatbot that answers your questions about shopping needs and complaints, etc. And it obviously stores back your complaints that comes back to you in case of any queries. And then we put further intelligence into your chatbots comes your artificial intelligence. Where in artificial intelligence, like I said, you have examples of self-driving cars, you have examples of diagnosing your diabetes, etc. So artificial intelligence is when your machine starts thinking like a human, starts behaving like a human, and again continuing with the example of real estate audit, it would also start thinking, giving suggestions in terms of you shouldn't be doing this particular but you should be doing this. This might be useful for you. So where your intelligence aspect comes into place, where you have to sort of take decision whether to take a right or a left or stop when there's someone crossing the road, versus taking decisions whether person has diabetes or not. There are symptoms showing, etc. When your artificial intelligence comes into play, and of course the common platforms for the same are Homes in Azure and Watson, and so on and so forth. So this is basically where your journey of your automation takes place. But I will talk about RPA. Obviously all of y'all know that it would be advantageous if you have a bot with your daily activities, because obviously it's 1/10 the cost and of the cost, and it obviously takes 1/3 the time, so lesser time. It runs 24/7, unlike human beings. We need to work in shift. We do not have the capability of working 24/7. It has a faster payback, obviously enhanced processing as compared to human beings. Human beings can still make mistakes. We are humans at the end of the day. But a machine would not make that mistake. And it obviously has an increased capability of hiring, handling additional volume, etc. So that's where robotic process automation would be advantageous. As at the end of the day, a machine is obviously going to work better than a human being person. Going to, as I said, as CAs, even though, we spoke about multiple jargons and buzzwords in the industry, how does it work? Like sometimes feel like, how is it useful for us? How do we sort of use technology? Although it's good for, general knowledge, yeah, but how do we sort of utilize this in our day-to-day activities? So, there are certain rules that you need to keep in mind to realize whether automation can actually be helpful for you or not. Starting with, there are multiple activities that you could be doing in your day-to-day out life, right? So, for example, let's say filing returns or passing transactional entries, or pulling out reports from online. In case if you're dealing with share markets, then pulling out the current rate of what the share price stands at, and then doing certain simulations, etc. So within those activities, we need to see these 4 rules, and if these 4 rules fit in, we can actually utilize automation and make our lives much more easier. Starting with number 1, it should be rule based. So, for example, I have to sort of every day morning go at 10, pull out an attendance report, make an entry in the timesheet, saying that this was, 10 people were available. They worked for, let's say, 8 hours each day, with one working at 7 hours, and then your system giving a computation of, what should be the final payout at the end of the day. So, so it should be rule based. It should be standardized. Obviously, it cannot have multiple complications. It should have a high volume. It cannot be 1 entry, 2 entry, and it should be on the system. It's simple. So if these 4 rules are actually, satisfying your answer, you can actually use automation. So again, quoting a few examples here where automation has already been used in the industry in, the CA domain per se, starting with finance accounting, where, e-filing can be done by an RPA bot. You can actually prepare tax provision returns. And there are multiple examples, but I'm sure you could actually, I'm sure you would have already started thinking about examples where, you could actually have a bot put in place instead of the daily monotonous job that you already do. But I know the other question that comes into your mind, and most of you all, I think this is the question that I get always, is will automation take our jobs? Because as far as what I've explained, everything is where automation can potentially be utilized. And then, at the end of the day, the question comes in our mind that, where would we be used? If everywhere machines have to take place, if there's a full factory with, robots, and, there's a full shop with robots, and there's a car driven by robots, where operations are done by robots, where would we basically be used? So the question is, though, automation will not take our jobs. What automation here what automation is doing is basically it's taking away the monotonous work from our day-in, day-out activity, so that we as humans can focus on more value-adding work, on more lucrative work, something which is more meaningful, something which is more leveraged upon, something that can be put across in a more thought processing way, as compared to everyday sitting, pulling out reports, passing entries, and doing something that can be replaced by a machine. At the end of the day, no machine can actually do some extreme complex thinking, because at the end of the day, humans would obviously exceed. And even for running those machines, there would be humans required at the end of the day. The machines need to be advanced, as in when you're in. So again, giving the example of audit of real estate, as in when you're in days has multiple rules, etc. The machine has to be put up those rules, etc. That there has to be some human who's going to, at the end of the day, run the machine. But it's taking the busy stuff, the stuff which basically keeps us busy in non-lucrative work from our roles, and giving us more time to sort of focus on more value-added work, where we can actually use something as where we can actually use human intelligence to sort of value add to our journey. And so what do we do in order to avoid automation taking our jobs, right? Because let's say 3 years, 4 years down the line, we do have machines taking place, machines taking our roles, and machines replacing us, as people call it. So what do we do in order to still be advanced? We need to sort of keep learning. We need to sort of keep ourselves advanced, keep ourselves aware about the new technology that's coming in, but at the same time be the master of each of the respective expertise that we hold, instead of just being aware that there is some monotonous work. So I hear a lot that whatever I do is quite monotonous. So if that's a question that's coming in your head, then that monotony is definitely going to be replaced by automation. So what do we do to avoid that? We bring in a new flavor, we keep advancing ourselves, we keep learning and advancing to a level where we are basically experts. And that's where automation basically helps us becoming more advanced. It's not going to take our jobs away. It's just going to take away, as I just explained, it's just going to take away the busy work, the rule-based work, the monotony in your work. But it's still going to have a lot of arena that you can actually explore as experts, as humans, where your intelligence is not. So I think that's my. Do I still have time? Please confirm I have lost track of time.
Ma'am, if you want to continue, you can continue for 5 more minutes. There is no problem in that.
Sure. Thank you, ma'am. So basically, this is the question that I get very often. As CAs, again, the question comes, and since I come from the consulting field, I get multiple questions in terms of, how do we expand the horizons beyond auto tax? Although, we do our articleship, we do our internship, and, we become experts in the financial domain. But, how do we expand our horizons in the field of consulting? How do we expand our field in the world of automation per se? It's very simple. Just read upon the field of automation. There is a lot of ready reckoners and content that is available nowadays online. And you have multiple readily available links. There's a book available. I have referred to that book as well, Automation Conundrum, that basically explains about how automation helps us in our day in day out activities. So the content here is that you keep referring to multiple automation journeys, and keep yourself well versed with what's really happening in the industry, along with what you do in your day in day out activities. Because at the end of the day, you have to stay the master of your respective journey. So that's something that really helps you stay advanced and stay ahead of what the evolution is eventually taking place. So I wouldn't want to extend further, because if I pick up a new topic, I would need another 15 minutes. But
no problem.
Yeah.
Thank you so much, ma'am. It was really an enlightening session from you. And from my side, if I'll say that once hearing on the topic for the first time, that intelligence automation made me also so confused that what is going to be there. But you made it so comfortable topic, and you connected it so well through our daily lives. And you are right, we all are using it on our daily life. And the topic you all took upon, like metaverse, which we are hearing on daily basis, and these are kind of robotic topic to us, being practicing members, but you made it so easy to understand. And now we are also feeling confident that we all know intelligence automation to a certain limit. So thank you so much, ma'am. And you have already answered all kind of questions which were there in the question. So I'm not going to ask further questions, because the similar question you were talking about were asked in the question box. So on behalf of WMEC, would like to extend my vote of thanks to you, ma'am. And you're such a bright personality. Hearing your introduction was already an interesting topic. So such a multi-talented person you are. Thank you for being with us today. Thank you so much. Wishing you a very happy new year and a great year ahead. Thank you so much. And on behalf of WMEC, I would like to thank all the members who attended the session today, and would like to thank Vice Person CA Priya Kumar ma'am, and Chairperson Sripriya Kumar ma'am, and Vice Chairperson Preeti Savla ma'am, for giving me this opportunity to being a moderator of the session. Thank you so much, everyone. Now, would like to request technical person to wind up the session, please. Thank you, everyone. Thank you, ma'am.
Thank you so much. Thank you so much.